Welcome to video lesson 4.1. Today's lesson we will be going over market structure. Some subtopics are trends, how the trends are created. I know we have gone over that in different lessons, but we'll touch up on it once more. We will be discussing retail trader bias, what the retail trader thinks when he is trading these trends, or how we were taught as retail traders to trade a trend. And we will be going over the characteristics of the different trends. We will discuss session change manipulation, the normal daily pattern, which is the whipsaw formation, the connecting of the trends, or the daily connection, the consolidation, which basically is the connecting of one whipsaw to another, or one formation to another, and also an accumulation phase. So the consolidation is a very important topic that we will be discussing once more. Stop loss and take profit zones, where retail traders may be placing their stop loss and take profits. Liquidity zones, where the market may be searching, where the market may go to for liquidity. A 3-day reversal trend happening midweek or on Wednesday. You can see if you go into Forex Factory or any Forex news outlet and you go over the past, every Wednesday, 90% of the time, Wednesday, the middle of the week, is when the most news or high impact news events occur. And when this takes place, a lot of times a reversal will happen, or a retrace of some sort will happen. So, to start off, we will be talking about trends and the characteristics of a trend. So, here we are on Euro USD, the 15-minute chart. I don't have this noted on here, so I should better note it right now. We will also be going over higher time frames and how everything that I'm talking about right now is based on a fractal formation, or these structures and the characteristics of them are the same on a 15-minute as they would be on a 4-hour or a daily chart. It's the same concept, it's just micro and macro, and that's what is so special about the market. It's always unique, yet there's structures that can be formed and be created on different time frames that are very self-similar. So here we can see the Euro USD 15-minute chart. We are in somewhat of a downtrend at the time that we're looking at this right now. A retail trader's perspective on this, or a retail trader, what are we told as retail traders to do on a third hit to a trend line? We are told to either buy or sell the trend line. So let me elaborate a bit. Here we can see I have some nice trend lines graphed right here on this on this 15-minute chart for the euro. Let's mark them a little better. It's a pretty obvious downtrend, right? At this time. Here we can see one hit to the trend line, a second hit, and now a third hit with a pretty decent candlestick, right? A pretty decent rejection, or whatever retail traders like to call that. But what do you see here after that third hit? After the third hit, also, what would you expect as a retail trader after that third hit? Well, since we're in a downtrend, and the characteristic of a downtrend is to create lower lows and lower highs, you would have your take profit zones below this low, below the lower low, right? And you would sell at the hit of this trend line. You would see that and you would sell. And look what happened. The market consolidated. This was right after, or right during session changeover, basically. Session changeover for about 17 to 20 hours, the market stayed in consolidation, letting as many retail traders in on this trade, on this sell idea as they could, right? Retail traders were seeing this trend line being hit and rejected, apparently, and they were selling. Where would the retail traders most likely have their stop loss? Well, probably above this high right here, right? Right in this zone. What happens? The dealer does not go down, does not create a lower low, because the trend is now visible to everybody. This is now an obvious trend. So what does the dealer have to do? Once the dealer makes the trend obvious, right? It's pretty obvious here. Once it's obvious, the dealer must go against the trend. He has to. Otherwise, he will not make money. Alright, there's so much money up here because there's stop losses of these sellers that he adjusted the market to go against the trend. And you can see here, once again, the creation of that new trend you could maybe now call this an uptrend, right? It hit once, a second time, a third time, and it even rejected there for a little bit, and now it's hanging around here. How many buyers are there right here? How many buyers are there right here? How many buyers are in this chunk alone? And where do you expect their stop losses and their take profits to be? Well, if they see this uptrend, right? They see that uptrend. Now it looks like an uptrend to them. Their take profits are up here. Their stop losses are down here. What must the market do? The dealer cannot go past this area. He cannot go into this area because he knows that there are take profit zones up there. So the dealer must adjust against his trend, because the retail traders are onto him now. The retail traders have sniffed out the trend, and there's too much money that he will lose if he goes up once more. Too many take profits will be hit. So he must adjust against the trend. And in one big candlestick, you can see that happen. One big swipe. He takes all those stop losses out. And then what happens again? Alright, well, right here, we don't really know what's happening. We see this big spike down. Okay, maybe we're going into a downtrend now, right? Because there have not been any more higher highs. Sorry about that. Maybe we are going to a downtrend now. What happens? Dealer goes once. Alright, let's remove some of this junk. Alright, the dealer hits the trend line once. He hits it again. He hits the trend line a third time and consolidates in that area. What happens after he gets as many sellers in here as he could? As many people selling, thinking that it's going to go down before it goes up. What happens? He adjusts against his trend. Too many people are onto him. Whoops. So, not only does this take out the stop losses of sellers in this area, stop losses in there, but there were also stop losses of sellers in this area. People that sold here and were hoping to get a few hundred pips and had their stop losses still in this area got stopped out upon the market spiking against them in that one news event. That was a news event induced hit to the high. So, we're told as retail traders, you guys, to trade with the trend. And we're told to trade 3 hits to the trend line. We're told it's not a valid trend until the 3rd hit. Yet, upon the 3rd hit, we can see 90% of the time the market goes the complete opposite way. And this is designed to happen. This is not random. I have not, just picked out this special chart. You can go on every chart and check this out. You can see it for yourself. Let's go on Euro CHF. Hopefully these will load. I'm not sure what's going on. Alright. Well, sorry about that. I guess what we can talk about now is the session changeover. we were going to go over the session changeover manipulation, and we can see it here very clearly. What have you guys noticed? If you have noticed anything, if you have noticed it at all, what happens at 4 o'clock? Or, well, obviously for you it's different, but for me it's at 4 o'clock. What happens for you at session changeover? This blue line is technically in Forex considered the start of a new day, the start and end of a day. And it's also considered a session change. Have you guys noticed anything strange or special about these times? Well, have you checked out your spread during session changeover? Spread is usually 10, 20, 30 times greater than normal. Why does this happen? This happens for a reason. Mostly it's because at session changeover, there will be news events that are plotted on this exact time. And what also happens is not a coincidence. There are some brokers that will close and not open for an hour, for 30 minutes, until after session changeover. How many times do you refresh your broker or your browser before that candle finally shows up? I'm sure you've had to do that before. This happens for a reason. There are days where the dealer will use this to his advantage, and it's not really necessarily even the dealer. Sometimes it's the broker that does it as well, but they're in cahoots with each other. They work together. So spread can be manipulated. Let's say spread was manipulated 20 to 30 pips on NZ to USD. There was this massive news event that occurred at exactly session changeover. How many brokers' screens were frozen at that time? I had a guy in the Telegram chat say his broker was still froze like 2 hours later, 2 hours after that news event happened. His broker completely froze. So this happens for a reason, you guys. And this isn't just NZD-USD. This is just an example that happened 1, 2, 3, 4 days ago. So there will be these high impact news events that occur at these times. And check this out. Price was down here. There was a 55 pip spike. But remember, there is also that spread. Spread is being manipulated as well. So we can account for a 10, 20 pip spread. All the orders in this area were activated, even though the candle did not even get close to that area. As well, the stop losses were hit even though price did not get into that area. Yet spread was the factor. So let's go on to GBP USD, because this occurred as well on GBP USD just a few days ago. I believe last week it was. Session changeover. That was a 225 pip drop, but we know GBPs always have that big spread, and that's normal for them to have the big spread. Imagine the spread as they're manipulating it. The spread could have been 30 to 50 pips. That's all the orders in this area that were stopped out or activated by the spread. And then price didn't come down to that area until 9 hours later. So, okay. Session change manipulation, the whipsaw and the connection of trends. That is our next topic. Okay, here we can see this a very nice example on Euro USD of an uptrend. But what do you see as well? You can also see there are these consolidation zones. There are obvious zones where price stays in consolidation and does not really move. And this happens at session changeover. We've talked about it before. I won't go into much detail about it right now. But every day it is different. Every day can have more or less manipulation than the next, or more or less consolidation than the next. It all depends on how much the dealer wants to move the market that day. So, we can see these clear areas and the straightaway zones. Alright, where price just basically moves in a straight line. This happens because price needs to get to a zone very fast without having people jump in on the trade. In other words, the dealer has to get from one zone to the next, yet has to consolidate and build up as many contracts as he can and move the market, move to that zone in as little time as possible. So he uses most of his time to consolidate in one area, and then you can see this was a 4-hour move. In 4 hours, he moved the market Euro USD 84 pips. Completed the daily range. How about here? In 8 hours, the dealer went 80 pips. And a lot of the time, these moves will happen when you're sleeping. A lot of the time, this structure, this consolidation area or accumulation will happen when you wake up, all throughout the day, and then when you go to sleep. It depends where you are and your sleep cycle. For me, I'm in the United States at the moment. I get up, well, I should say all the regular people get up at around this time. This is right when the market goes into consolidation. This is about 7 in the morning, or maybe 8 in the morning, 9 in the morning. Right around here is the morning time. Right around here is nighttime. Alright? Look at all throughout the day while you're sleeping, or I should say while you're awake, 19 hours you spend in consolidation, in accumulation. This goes on every day. And this is meant for retail traders in the United States who have more capital. They're accumulating during this time and not moving the market until the retail traders in the United States go to sleep. A lot of the times we will be sleeping when these events occur, if you live in the United States, unless you sleep differently. I normally will go to bed during this time, or around here, sleep about 6 or 8 hours, and then get up London session right when a false breakout is occurring. I see that false breakout and I trade in the opposite direction, going with the trend, of course. Okay, here's a very beautiful example, you guys. This is an uptrend. We can see the structure here, and we can see the whipsaw that we talk about that creates the structure or the trends, right? This whipsaw just occurred right here. Okay, it's the same thing, and you have to adjust your eyes to see this. But once you see it, it's clear as day. It's so easy, you guys. I shouldn't say easy, but it gets much more simple than you realize. Every day is different as well. Okay, we can have these days where the structure is very nice, and then we can have off and choppy days where the structure is, somewhat choppy. And you don't have to trade those days. That's what's nice. You don't have to trade crappy days. If you know the structure, like this would have been a great day to trade. You can see that consolidation, hit to the high, mini M, reversal formation. You get in, easy, 50, 60 pips. What is that? 58 pips. End the day in consolidation. And you can either, whether you're a intraday trader or you like to scalp or whatever you like to do, you can either, oh gosh, now I froze it again. You can either jump in here and take profits before session changeover, before this consolidation occurs, or you can jump in here and wait a few days. Wait 3 days before Wednesday comes around and the trend reverses on you. You could catch 100 to 150 pips. You see this whipsaw, this formation here, is what is needed to keep the trend going. And we've talked about that many times before. This is the only structure, really, that can be found over and over in the market and can be seen as a fractal in the market. One of the normal fractals that you see in the market. Consolidation, hit to the low, hit to the high, consolidation. Consolidation, hit to the low, consolidation, hit to the high, consolidation. They're just different, unique structures based on the same, mimicking the same concept of fake out to the high, fake out to the low, and then end in consolidation, get as many people, get as many retail traders to stop themselves out in this consolidation, or get as many retail traders to see something in this consolidation area and jump in here when there really is no trade to be taken. And they'll stop themselves out after a few hours of jumping around between -1 and 2 and 3 pips. Because look at this. Look at this, you guys. This is 6 hours, 5.5 hours of consolidation. That's like it moved, the market moved 6 pips. It had what, a 6 pip range? Let's call it a 10 pip range. Now I'm not saying you shouldn't trade London Asian session if you see a setup. If there's a setup and in your mind it looks very good, by all means take it. But if the market is in consolidation, why would you trade these candles? You know, this is another 6 hours of 10 pips range. Why would you get in here when you could get in right here on a sell? Why would you get in here on a sell and wait 5 hours to get 8 pips when you could get in here on a sell and in 5 hours be in 32 pips? You know? And then when retail traders say, you know, the market beats them up, oh, I can't trade, oh, the market's not moving, well, maybe it's not the market. Maybe you just don't know how or what you're doing. Maybe you don't know why the market does what it does. Maybe you don't see exactly with clear eyes how the trends are being created. Okay? So this is what I want to show to you guys, that there are these structures in the market that occur all the time. And they can be traded, and it's not, you know, it's not impossible to trade this market. There will be days where the entire day is spent in consolidation. Or we could also go on, you know, I could zoom out on the 4-hour chart or the 1-day chart on Euro USD right now, and it's in consolidation right now on the daily chart. It's just your perspective, right? Here we can see about an entire day and a half of consolidation. But what happens after that? We can see that normal pattern that we talk about. That normal pattern we talk about happens even on a macro scale. So, let me pop up our next topic. I mean, I've covered quite a bit, but let's go over liquidity zones for a second. These are it's a quite lengthy topic, I think, but, well, it's somewhat hard to explain, but hopefully you guys will understand it the way I explain it. Okay, we talked about before, there is a big sum of stop loss orders up here of sellers. What else is above here? Buyers, right? There's going to be buyers above these highs that are expecting a continuation in the buy trend, or breakout traders. Okay, so we can expect buyers in this zone, as well as stop losses of retail traders that went short in this area, right? Let's say we are right here. We see a large chunk of consolidation. Now, after consolidation, what do we know happens? Well, consolidation, then either a hit to the high or a hit to the low, right? That's always what happens, you guys. What happened here? The dealer consolidated 3 days. This was market open. And what do you know? This is middle of the week, Wednesday. I do recall there were 2 red envelope news events. One that pushed price up, and then another that pushed price down. This is not a coincidence, you guys. It's all set up like this. Everything is set up. The news is set up. You look at the numbers on the news, yet it means nothing. It means nothing if the structure is not how it should be presented. So, what can we see here that retail traders might be looking at? Well, I guarantee you, after seeing this, retail traders are thinking that there is going to be a continuation in this downtrend. You know, this continuation of that downtrend, right? We said before that we could expect stop losses in this range, but as well up here, right? Because here are the highs, right? Here's a high. Here's a high. We can see lower highs being created. Stop losses of retail traders that are selling are going to be in this area. If there are too many sellers, or I should say, if there are sellers in this area, price must come up to fill the sell orders. In other words, alright, it gets confusing, you guys. It gets somewhat confusing when you talk about liquidity. But imagine there being more sellers than buyers in this chunk, in this consolidation chunk. The dealer managed to create an environment of more sellers than buyers. So, the dealer must push the market up to fill the seller's orders. In other words, for every seller, there needs a buyer. So, if there are sellers here, the market will look for buyers the dealer will balance out the market and push price up because we are in need of the liquidity to fill the buyer's orders or the seller's orders in this area, right? The sellers are here. We know there's buyers up here. This is the buy zone. Price comes up looking for those buy orders because of the imbalance in liquidity. He balances out the liquidity by going up here. But, all right, upon balancing out the liquidity by spiking the market up this much, retail traders have now seen this and are buying in this area, right? Thinking that, well, the trend must go up now. A new high has been created. What happens? Buyers start accumulating in this zone. More buyers accumulate than sellers. What must happen? The dealer must go down and accumulate sell orders to balance out the buyers here. Right? Does that make any sense? So, it's basically a balance game, you guys. The dealer isn't really manipulating as much as he is balancing out the market for liquidity. When there's buyers here and people start buying, there has to be someone on the other end to fill those sell orders. To fill the buyers of the sellers, I should say. The buyers need sellers. So what happens? Price comes down, accumulates, looking for sellers. It looks like not enough sellers were found. A sufficient amount of buyers in this area were imbalancing the market enough to need to be pumped down once more. Market accumulates and then gains its ground once more. Basically gets back to base. So this will happen all the time, you guys. This doesn't happen just because of news events. This doesn't happen just because it's this pair or because I made it up or something. You know, this happens all the time, and this is the only reason why price moves. Price doesn't move because you have an indicator that tells you where it's going to go. This indicator on my chart here isn't going to tell me that price is going to shoot up and then shoot down. It tells me afterwards what it did, but it isn't going to tell me in real time what's going to happen next. And once you understand how the trend is created, how this distribution of liquidity takes place, then you will understand where the market may move to next, which zone the dealer is targeting next. And that's really all we're trying to look for, is which zone might the dealer target next. The coming lessons will be, we will talk about zone hopping and how the dealer hops from one zone to the next, searching for liquidity. Whew. So, thank you guys for watching. I believe this was just about all. I guess we could go over the midweek reversal. The Wednesday, 3 days of trend. Okay, like I talked about on Wednesday, there are normally much more news events, much more volatile news events. And it's really to, like I said, to balance out the liquidity. So for the first 2.5 to 3 days, the market will go in a certain direction. On the third or fourth day, which would be considered the middle of the week, where normally most of the high impact news events occur, and this is not a coincidence, this will happen. This structure, like we talked about, this hit to the high and the low. On Wednesday, the dealer will target either the highs or the lows of the week, or maybe the month, or maybe yesterday's high, yesterday's low, or maybe a certain liquidity zone where buyers or sellers have been accumulated. Now realize that this is just a news event. It has nothing to do really with the news and everything to do with where the money is at the time, where the liquidity is at the time. So that's really all there has to be said this lesson. I hope you guys enjoyed. It was a lengthy lesson, but better, better to absorb all the knowledge you can. So, thank you guys for watching this lesson. See you in the next one. Peace out.